So where's everybody joining us from tonight? Or today, I should say, depending on where you're at. It's always fun to figure out where everybody's calling or joining us in from, because we get people from all over the world. Nicholas from California, Florida, Buffalo, Jason, Des Moines, Brian, Melbourne, Australia, George, London, United Kingdom, Fort Lauderdale, Frankfurt, Germany, South Africa, East Texas, San Antonio, Texas from Mary, RV in the Arizona desert, on solar. Awesome, Patrick. South Africa, Cape Town. Good deal, Bernard. There's a couple of people that are in the membership from there. Perth, Western Australia. Cool. Australia, Oklahoma, England, Michigan, Seattle, British Columbia, Atlanta, Georgia, Germany, Panama, UK. Yeah, see, we have people coming in all over the place. If I didn't say yours, I apologize. There's just hundreds of things coming through really fast, so it's hard to keep up with all of them. Well, thank you all for coming out. I appreciate you taking time out of your day to spend with me. Whenever I do a webinar, whenever you're taking time out of your day to come listen to me talk, I always want to try to make sure I teach you something. I make sure that you leave here with information that you can turn around and start implementing in your trading as soon as, well, Tuesday, because markets are closed on Monday. So my next question for you guys is, why are you all here? What made you want to come out? What made you want to join the webinar? See what we're talking about. Wanted to learn something new. Wanted to learn about price action. Wanted to improve your trading, Wolfgang. Rich wanted to learn. Good deal. Excellent. You want to learn how to trade with no indicators. Well, you're in the right spot then, Mark, because we're going to be talking about trading without indicators. So, for those of you that don't know me, my name is Thomas Wood. I'm the Director of Trading Operations at Basecamp Trading. We'll go ahead and get started today. We'll be talking about fundamentals of price action and how price action and what you're going to learn today can actually help increase your consistency and smooth out your equity curve no matter what type of trading you're doing. So you can use it alongside of your trading plan that you're already using. Now, before we get started with the good stuff, we got to go through the risk disclaimer. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance making independent investment decisions. BasecampTrading.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, BasecampTrading.com does not guarantee its accuracy, is not liable for any loss or damage may result directly or indirectly from such content, from the inability to access such information, or any delay in or failure of the transmission or receipt of any instruction or notification in connection therewith. Any past performance results, shown for illustration and example only, are hypothetical and as such have many inherent limitations. No presentation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. So that is a mouthful. You said, Mary, you said, I wouldn't miss any webinar you do. Well, I appreciate it. Thanks. Have you counted how many times I've read that? No, Wolfgang, but it's probably been a couple thousand. And then along those same lines, we are required to show you CFTC Rule 4.41. And this is basically saying, hypothetical disclaimer, if we're showing you examples from the past, obviously there's no guarantee that it's going to happen again in the future. Now, that being said, I never teach anything that I haven't traded or don't trade live with real money myself. Okay? So I believe they work. We use them every day in the trading room. All the concepts you're going to learn today. So with that being said, this is me. Let me introduce myself. I'm the guy. This is my beautiful wife, Dora, and our dog, Merlin. And one thing everybody always says when they see me is they go, wow, you are really young. And yeah, I mean, I'm a little younger, but I have been trading since I was about 13 or 14 years old with real money. And I've already spent more time trading than most people will in an entire lifetime, right? I got started in this industry. The whole reason I came into the education part of trading was because when I was younger, and the person that got me started was my dad, okay? And he actually subscribed to quote unquote gurus out there and lost thousands and thousands of dollars following these people and doing what they told him to do. And it just irked me. I thought that just wasn't right. So my goal is to become the exception to the rule. I don't want to be like all the other gurus. I don't want people just coming in and blindly following me. I kind of want to take the Wall Street curtain, peel it back, and say, look, it's really not that difficult. And that I can actually really help you learn how to trade. So that's what my goal is. And that's the whole reason I got into this business, as opposed to going and working at a bank or at a fund or something, which I've also run a fund and in the process set up another one, but that's a story for another time. So where are you currently with your trading? Okay, you're in one of three categories. Alrighty, you're either losing money, breaking even, or making money, period. You're one of the three. Which one are you? If you look at your trading over the past year or however long, where are you currently at? Green, you're breaking even, making money. Andres, making money. Rich, breaking even plus a little. Jose, even. Losing to break even. Making a little bit, breaking even. Losing, making money. But you want to make more. Making money. Have gone from 1 to 3. Good deal, Dave. Breaking even. You're still paper trading. That's good. I always tell people, look, when you're getting started, it takes time. Learn it simulated. Don't go lose a bunch of money trying to just jump in live right off the bat. Learn it simulated. Once you can get consistent with simulated, then you go live. Not confident enough to trade. Losing, making money. Thanks to you, making money this month thanks to your training. Good deal, Steven. Making money, paper trading. Losing due to not following a plan well. Yeah, you gotta follow your rules. Well, let me tell you a story about Dave, all right? When Dave first became a member of Basecamp Trading Community, this was a little over a year ago. He's actually in here right now. He's now somebody that I would consider a friend, and he actually works with us. But when he first came in, his equity curve used to be one of those 1 step forward and 2 steps backwards type of equity curves where you continually just go downhill, okay? And he said when he came to us and he started working with us, he told me, he goes, I've studied trading more than anything else in my entire life, and I've never failed at anything throughout my entire life. I literally have built a multi-million-dollar business from the ground up with a $5,000 credit card. But trading, it is just vexing the heck out of me, because it seems like the harder I try, the worse I do. How many of you are in a similar type of situation where you go, look, I've always been able to be successful. I've always been able to make money or achieve whatever I set my mind to. But then when I got into this trading game, it seems like the harder I try, just the faster I go downhill. Yes, I am. Yes, absolutely. Me, Benny, Scott, Marvin, Jason, John, Jason, Steven, Trevor, Patrick, Dennis, Andre, Scott, Mustan, Sedley. Yeah. So it happens. And the thing is you got to think about trading differently, because if you think about something like, well, let's just use this for example. If you're trying to lose weight, all you got to do is work harder. Well, with trading, if you work harder and you're digging a hole and you work harder, all you end up doing most of the time is digging that hole faster and blowing up your account. So I always say one of the worst things that can happen for a new trader is they come in, they start making money, and then they lose a whole bunch of it, and they dig a hole. And instead of just stopping trading for the day or for the week, they go, you know what, I can get myself out of this hole. And they end up doing it, and they pull themselves back up out of the hole that they were in. Because then they think, oh, I can do that. And then all of a sudden, the next time they try to do it, they end up blowing up everything. So how many of you have an equity curve similar to this? And this is an individual named Isam. He sent me, this is his equity curve, or this was one of his equity curves, and I'll show you what his equity curves look like now. But how many of you end your day or your week or your month with an equity curve that looks something like this, where you're doing pretty good? And I mean, you can see here at one point he was up 526%. And then all of a sudden it was just downhill from there. And it collapsed. and he blew up the account. And he sent me several of these that he had blown up his accounts previously. And like I said, at the end, I'll show you what his equity curve looks like. So how does it make you feel when you are looking at your account equity curve and you go, what the heck am I doing? Maybe a large part of what you were planning on doing in the future relies on you being successful with your trading. And if you don't end up getting this right, if you can't get the trading part down, you're not going to be able to achieve or do the things that you want to do. So I want you to think about, what's the lack of trading success actually costing you? Is it costing you family time, emotional or financial stress? Is it making you so that you can't go out and do the things that you want to do because you don't have the money or the freedom to do it? So when does it get to the point that you're willing to actually take the next step and make a change? One of the things that I see happening all the time with traders, especially retail traders, is they come in and they decide, you know, I'm going to be a trader. And they just put money in an account and think they're going to go out and take on the world, that it's easy. And they don't take the time to actually get the proper knowledge and learn how to do this the right way. And they end up having equity curves that look like this. And that's the problem that a lot of traders, just like Dave, who I was just talking about, face today. All right. And one of my missions with Basecamp Trading is we want to change your long-term habits, change your behavior patterns, and change your futures. Because it's not an overnight fix. It's not a flip the switch and now you're going to make money. It's a long-term commitment. All right. So why are we different than other educators? What are we trying to do? Well, one thing we heard from the thousands of people we worked with from around the world is the traders come in and they get overwhelmed, they get confused, or they get frustrated because they've lost money and they don't understand how to get that consistency part where they go, yeah, I've made money for a little while, and then all of a sudden it's just boom, it's all gone. So what we did is we created what we call the Summit framework, and that's going to help you as traders move along from losing money to consistency. And we understand that it's not just to go out and do it, but that it's a journey. All right, you need a guide and you need a long-term commitment. And that's what we're here to do, is help you with that long-term guidance. So we do that by taking you through the 3 pillars of the Summit framework. The first one is Basecamp. And in Basecamp, you get acclimated. That's why we have the acclimation course. And what you do in acclimation is you're going to learn the fundamentals of risk management. You're going to learn the fundamentals of how you trade, of how the markets move, fundamentals of options, fundamentals of futures. You're going to learn how to keep a trade log and a trade plan and how to get a set of rules that you can follow. Then you're going to move on to the Ascent, and then finally into Everest. And the Ascent is where you're going, okay, I know the fundamentals, I know the basics, so I have that strong foundation to build on. Now let's start learning some more strategies and some more tools that I can be using to then go forward and trade. And then lastly, you move into Everest, and that's where you're like, okay, I know all the strategies I need to use. I have all my foundation is strong. Let's start trading live, and let's start making money and tweaking my system to get to the point where it smooths out my equity curve as much as possible from lower left to the upper right. Now, at the end of the webinar today, I'll show you how you can take the next step. And by the end of the webinar, you're going to have a pretty good idea of whether or not Basecamp Trading is a good fit for you. If it's not, no problem at all. I always tell people there's hundreds of ways to trade the markets, okay? But for those of you that say, yeah, I'm ready to take the next step, I'll tell you how you can move forward with working with us and moving through the Summit framework. All right. So what are you going to learn today? What are you going to learn? Like I said, I always try to teach people stuff when they come in. If they're going to spend time out of your day to come spend with me, I'm going to try to teach you something and help you out. So we're going to talk about defining trends. No matter what market you're looking at, no matter what time frame you're looking at, we can define whether or not a market is in one of 3 stages. It's either going to be an uptrend, a downtrend, or consolidation/reversal. So I'll show you how you can determine that. We're going to talk a little bit about how indicators can cloud your judgment, because one thing that happens is traders come in, they go, yeah, I just went to this webinar and I bought this indicator from this guy and he told me it was going to help me make thousands of dollars, and then all of a sudden I'm just losing money. Or I have 20 different indicators on my charts and I can't really tell what the heck's happening. Some of them are saying buy, some of them are saying sell. And then lastly, we'll be talking about price action trends and how you get into them, where you enter, where your stops go. Okay. or one of the ways to enter them. So today we're going to cover all this stuff, and you can take it and you'll be able to apply it to your trading on Tuesday. But we realize that ultimately real change only comes from a long-term relationship. You don't put a band-aid on a sinking ship. Okay, you pull it out of the water, you fix it, and then you start moving forward. So the main thing that we're going to be discussing is what I call naked trading. All right, so what is naked trading? No, it doesn't mean trading with your clothes off. It means trading based on the price action itself. So trading based off of what the chart is telling us. We don't have to have any indicators. You don't need indicators to see naked trading setups. We're going back to the basics, back to the fundamentals, because if you think about it, basically all the indicators out there are based on the price action. So why not just learn how to read the price action itself? And I had one guy that came in here, and he's a professional trader. Okay, this is what he does for a living. He's been doing it for 20 plus years. He goes, look, I never had the definition of a trend explained to me in the way that you explained it in naked trading. And that has been game changing for my trading. I was already profitable, but I applied that to my existing strategy, and I'm making almost twice as much as I was before. All right, so what is the definition of a trend? Well, the way I like to explain it is you look at it kind of like a math problem. Blank plus blank equals blank. So let's say we're looking for an uptrend. If we're looking for an uptrend, that means we need to have a higher high, and we need to have a higher low. So higher high plus higher low equals uptrend. Now, when I say higher high and higher low, what am I talking about? When we're discussing highs and lows, we're talking about pivot points. So a pivot point is a turning point in the market. So if we're looking at higher highs and higher lows, it needs to be something like this, where we're going, this high is higher than that high, this low is higher than that low, this high is higher than that high, this low is higher than that low. So we're higher highs and higher lows. Okay? So uptrend, higher high plus higher low. A downtrend is lower high plus lower low equals downtrend. So what does that look like? The exact opposite. Again, pivot points, turning points in the market. Lower highs, lower lows. We say this low is going to be lower than that one. This one's lower than that one. Therefore, we're lower highs and we're lower lows, and we're in a downtrend. Now, just like a math problem, all right, if you lose one side of this, for example, if we're looking for an uptrend and we have a higher high but we do not have a higher low, then this is not true. Higher high does not equal uptrend. You have to have both halves of the equation. So if we're looking at this chart here, it's trending lower, and then all of a sudden we come down and we do this, right? As of this point right here, are we in an uptrend based on what I just told you? Because we put in this higher low. No, absolutely not. You got it. Why? Because that's one half of the equation. So when does the trend change? The trend changes after we come up and break through the previous pivot high. Now, as of this point, we're good to go because we have a higher high and a higher low. So now you're back in an uptrend. Okay? Making sense? So if we look at a market that's trending up, and we go and we do this, we break down to a lower low, are we in a downtrend? Have we entered into a downtrend as of that point? You got it. Absolutely not. Why? It's one half the equation. We have to have the lower high as well. Once we get that lower high, then we say, okay, lower high there, lower low here. Now we're in a downtrend. So keep that in mind. You have to have both halves of the equation in order to equal a trend. Now the market is trading at all times. It's going to be in one of three stages. It's either going to be uptrend, downtrend, or consolidation / reversal. All right. When we want to be trading, we want to be trading when a market's in a trend. We want to be avoiding when it's in consolidation or reversal. Make sense? So let's move on, take a look at what this looks like. So this is bonds on a 500 tick chart. Now it's important to note that the trend is dependent upon the time frame you are analyzing. So we may have a 500 tick uptrend and a 240 minute or a 30 minute downtrend. All right. So the trend is dependent upon the time frame that you are looking at. So if we look at this chart, this is 500 tick bonds. For those of you that have been in the trading room with me, you know my favorite time frame for bonds is a 500 tick chart, and this is why, because they trend so very well. So let's take a look. Start on the left-hand side. We'll say, okay, we have a low down here, then we have a high up here, we have a higher low, and we have a higher high. Okay, because this high is higher than that one. This low is higher than that one. Got arrows going everywhere. See higher high and higher low. So, according to the definition of a trend, where's the trend as of that point? You should all know it. Higher high plus higher low equals uptrend. You got it. We have both halves of the equation. So let's keep on looking at the pivots. Higher low, higher high, 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 higher low, and we put in a lower high right here. So does the trend change right there? No, trend does not change. When does it change? When we break through the pivot low right here. As of that point, now we're in a downtrend because we have a lower high and a lower low. But this entire space here, that is all one single uptrend. Okay? And one thing that happens with too many traders is they see something like this and they go, oh goodness, the trend just changed and it's going back down. But in all reality, all we did was come back down and retouch the previous pivot low. It never broke to a lower low. It never put in a lower high. And then it just kind of slowly trickled back up and it started trending again. Okay? Pretty simple, right? Pretty easy so far. Let's keep going. This is crude oil on a daily. So start on the left-hand side of the chart. Low, high, higher low, higher high. Where's the trend? We are in an uptrend. Why? Higher highs, higher lows. Then we go another higher low, another higher high, another higher low, another higher high. So this whole thing here is an uptrend. Now I want you guys to notice we're not getting caught up on these little blips, these little small retracements. They do not matter. What we're looking for are the major pivots, these big pivot points, because that's telling us where the trend is. So don't get caught up on the small stuff. It needs to at least retrace for several price bars. All right. Then what happens? We come all the way over and we break to a lower low. Does that change our trend? Nope, absolutely not. You guys are smart. You got it. It's a lower low. It's one half of the equation. When do we change trend? Trend changes as of about this point right here. Now we're in a downtrend because we have the lower low. And as of about that point right there, we now have a lower pivot high. And we're in a downtrend. We go lower low, lower high, lower low, lower high, higher low, higher high. All right, now this is important. So the first thing you do when a trend changes, the very first thing you do when a trend changes is you're going to draw what we call the line in the sand. And we're going to revisit on this in a minute when we talk about actually entering the trades. But for now, what I want you to know is when your trend first changes, you're going to connect the two previous pivots, and that's going to be your line in the sand. Okay? Same thing goes up here. We're drawing a trend line going like this. If very quickly after you draw that line of sand, it comes up and it breaks it, or in this case comes down and breaks it, then we automatically resume the initial trend. All right, and again, we're going to revisit this in a second, but I want you to see this because this is a good example of that. So we go down, up, higher, low, higher, high. We change the trend. We'll draw our line in the sand. We break that line in the sand automatically back into a downtrend, and we go lower highs, lower lows, lower highs, lower lows, all the way down. All right. Do you use a 500 tick chart on all of your charts? No, I do not, Robert. But on bonds specifically, that's my favorite time frame. Okay, here's Apple. This is on a 500 tick. So start on the left-hand side of the chart. We have a low down here, and a high, and a higher low, and a higher high, and a higher low, and a lower high. And then a lower low, and a lower high, and a lower low, and a lower high, and a lower low, lower high. We go into a downtrend. Now, right here, we pop up, and we break through that high. Does not change trend, right? The other thing I want you to notice here is we have a pivot high here, and every time this market breaks through it, it leaves a long wick to the upside and pulls back down, closes below it. Breaks through it again, pulls back down, closes below it. Breaks through it again, pulls back down, closes below it. What's that telling you? What that tells us, when a market is breaking through support or resistance and it's leaving a long wick below that or above that, it's telling us there is a lack of willingness for that market to rally and to watch for a reversal. Okay? That's what you get here. Same thing happens right over here. We had a pivot low, breakthrough, close above, breakthrough, close above, and then you get the bounce. All right? But it's showing you a lack of willingness for that market to follow through. So we continue down with lower lows, lower highs. Then over here, we turn around, we break through this pivot high, and we put in a higher high. That does not change the trend, correct? Because it's one half of the equation. Yes, this is a doji. Now, the one thing I want you to notice about this is after it breaks through, this market pulls back and retests. Once support or resistance has been broken, it is good for a retest. It switches roles. And this is what we call a last kiss, where it breaks through, pulls back, retests previously broken resistance, now is support, and then accelerates away. If you're entering on a last kiss, it needs to break, pull back, and we go to enter after it retests and then breaks the previous bar's high. So it has to retest first, then it has to break the previous bar's high for a long, or it has to retest and then break the previous bar's low for a short, and then we go long with our stop below the low. So in this case, you'd be long here, stop below the low, looking for it to continue higher. All right. So let's take a look at one more example, and then we're going to move on. So this is the Euro US dollar. By the way, I'm showing you a lot of different markets on a lot of different time frames. Like I said, you can apply this. The reason that this is so good, in my opinion, is you can take this and the way that you analyze a trend, and you can apply it to any market and any time frame, whether it be Forex, futures, equities, doesn't matter. All right, whether you're trading a daily, a weekly, a 5-minute, or a 500 tick, doesn't matter. It all applies the same. So start on the left-hand side. You have a pivot high. You have a pivot low. This low is lower than that low back there. So we have a lower low. Then we bounce. And we put in a lower high. So as of breaking down here, we're in a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. Change to an uptrend. Now, what did I say? The first thing we do when we change trend, so we draw a trend line there. It doesn't break it. All right. It moved too far away. There's this big open space in the middle, so that trend line is not valid. We draw it here. All right. It does break it. So this would technically have been a potential short. Now, what is the first test? For those of you that have been in trading room with me or been in mentorships and stuff with me, you know the answer to this. What's the first test when we break through the trend line? The first test is the previous pivot low, the middle pivot on your trend line. Can it get through that? If it doesn't, if it goes down and stalls, like it hits it here and then bounces, close your trade and look to re-enter after it breaks the support. Okay? And this is why, because sometimes it'll come down, hit that, and reverse back up and stay in an uptrend. So in this case, we went higher low, higher high. We pulled down, couldn't break through the low here, put in another higher low, and just continue with the uptrend. Higher high, higher low, higher high, higher low, higher high, all the way up until we go into consolidation. Then up here at the top, why is this consolidation? Well, if the definition of a trend is higher lows and higher highs, and right now we have lower highs and we have higher lows, we don't have a trend. We have compression. We have a squeeze. We have a channel. We have consolidation looking for a breakout. Okay? Definition of a trend doesn't change. It has to be higher highs, higher lows, or it has to be lower highs, lower lows. Alrighty? So let's continue on. How do we enter into a trend? Now that we understand what the definition of the trend is, we understand higher highs plus higher lows equals uptrend, lower highs plus lower lows equals downtrend. First step we do after trend changes is draw that line in the sand. The first test after that line in the sand is broken is, can we break through the previous pivot low or pivot high? You heard about last kiss. Once support resistance has been broken, it then changes, rolls. Okay. Now let's talk about entering into the context of a trend. One of my favorite ways of entering is using what we call breakout. Okay. Or we watch for a entry, a break above the high or below the low of the previous n number of bars back, and you enter after the retracement has started. This is just one way of basically buying into dips. Okay, so what do I mean by breakout logic? Well, what I mean is, if this trend is going, if this market is moving like this, and each one of these lines is a price bar, let's say we're in an uptrend. All right, and we're pulling down. If we're doing a 2-bar breakout for an entry, if we're doing a 2-bar breakout for an entry, that means it needs to break the highest high of the past 2 price bars to go long. So the high of that bar would be here. So this is bar number 1 and bar number 2. So if this comes back up and it breaks through this high, then this is our long. And our stop goes below the low. All right. This is what we call breakout logic. And we're using it to enter within the context of a trend. So we look to enter after the retracement has started, or we're trying to buy the dip or buy the retracement after it starts to resume the trend. So we do not buy it while it's pulling down in an uptrend, and we don't sell it while it's climbing in a downtrend. We wait for it to have climbed and then start coming down. All right. Now, obviously, nothing is 100% guaranteed. The other thing I want you to keep in mind is with a trend, all right, your trend kind of works like this. Where's my mouse at? There we are. So think of it like a graph. So this is time down here, and this is probabilities of success. Probabilities of the trend continuing, all right? At the start of the trend, we're about right here. As that trend first starts moving, it goes like that. And then as time goes on, the further that trend gets extended, the further that trend has run, the lower the probabilities of continuing. So keep that in mind. If we're looking to buy a trend that's been going on for forever, the probabilities of that trend continuing are much lower. Now, it doesn't mean that the trend's going to reverse, but it does mean the probabilities of it going into consolidation are much higher. So we want to be getting in, ideally, within the first couple of retracements after a trend changes. All right. So let's take a look at what this looks like using breakout logic. So this is that 30-year bond chart, remember? So we're low, high, higher low, higher high, right? So we're in an uptrend now. As of this point, we're saying uptrend, so we're looking to go long. So how do we know, one question that a lot of people ask is, how do we know when a retracement has started? Well, all you got to do is look at when the market starts pulling back against the trend. If it's an uptrend and it starts going down, you're starting a retracement. All right, so it starts to retrace, and we're using 2-bar breakout logic. So it has to break the high. You can either do 2 or 3 bars breakout logic. It has to break the high of the past 2 or 3 price bars. So if you're doing 2-bar breakout logic, you're going long there with your stop below the low. And we're looking for the trend to continue. The next retracement happens here. 2-bar breakout logic would be long here, stop down here. All right, and you stay in it as long as your trend stays intact. Again, we're looking, this is a trend trading strategy. Okay, now if you are looking to trade multiple contracts and you want that initial profit to lock in, what you can look for is a retest of the previous pivot high for 1/2 profit, and then let your second half run. Or you do like a 1 or a 2-bar trailing stop for the first half. All right, but this right here is why we don't want to use a 1-bar breakout, because you get too many false signals. So by waiting for at least a 2 or 3-bar breakout, you have a higher probability of success. So would have been entry number 1 right here, entry number 2 right here, entry number 3 right here, entry number 4 right there, entry number 5, entry number 6. Entry number 6 would have been a loser. Why? Remember that graph I was showing you? The probabilities of success? Remember, we want to be getting in at the start of the trend, not on the tail end of the trend. The further the trend gets extended, the lower the probabilities of continuation. Let's take a look at another example. This was that crude oil chart. Low, high, higher low, higher high. So we're in an uptrend. We look for retracement. Your first entry is here. There's your stop, out. Second entry is here. There's your stop. Nice runner. Now, why is this important? Again, nothing's 100%. Anybody that comes in and tells you that trading is 100%, that have a way to make money all the time, they're lying to you. Okay, run away as fast as you can, because you're just going to lose a bunch of money. But it's a probabilities game. And in order to be successful in trading, you have to draw a balance between win percentage and the number 1 ratio, reward to risk. So what's the reward risk? Well, if this is what our average loss is, look at what, even if we were just doing half profit target, our half profit target is at least twice that big. And again, you have to draw a balance between how often you're winning and how much you're making on your winning trades versus how much you're losing on your losing trades. Now, again, this is just one way of trading within the context of trading. We're going to talk about another way here in just a minute. We'll go over a couple more examples here. So in this case, we'd have a long here, stop below the low. Again, this is just using a 2-bar trailing stop. All right, look for the retracement. You'd be long up here, stop below the low. It runs into the highs and starts turning around. You're getting right back out. We shift trend, look for the retracement. A 2-bar break doesn't happen until up here. So you'd sell here, stop here. Here's our retracement, 2-bar break, sell here, stop here. Again, this is a really simple way of just entering on retracements, but this is why you had to learn the definition of a trend first, because you have to apply the definition of a trend and understand which way the market's trending based on retracements, based on pivot highs and lows, before you can even consider trying to enter into the trade. One of the number 1 things you can do, in my opinion, to increase the probabilities of success and become more consistent is to apply a trend-based filter to your strategy. Whatever trading strategy you're using, just say, I'm only going to trade on the right side of the trend, and wait for the trend to shift before you get in. Don't jump the gun. All right. We'll go ahead and skip over this one last example, and then we're going to move on to the secondary type of entry. All right. So we talked about trend identification. We've talked about retracement, entering on retracements using breakout logic. Now we're going to talk about a breakout strategy using that line in the sand we discussed. So remember, the first step, just to recap, the first step we take after a trend changes is we draw a trend line across the 2 pivot highs or across the 2 pivot lows. This trend line then becomes our line in the sand, and we look for continuation of the original trend if that line is broken. All right. Now, where the retracement strategy is designed to get us into a trend and try to catch a big move, catch the rest of the trend because we're entering on retracement, this breakout is designed for just that. It's a breakout. So we're getting in. The market should rip our direction very quickly, and we're going to jump right back out. So we're not trying to stay in it for the long haul. Does that make sense? So if our line in the sand is broken, then we say that the market has had what we call a micro trend, or a short-term counter trend move before accelerating in the direction of the original trend. Alrighty? So let's take a look. We can look for trend identification. We say we're in an uptrend. This is that bond chart again. We're going to look for a lower pivot high within the context of an overall uptrend. Draw our trend line, enter on a break, stop below previous bar's low. We get our initial surge, trailing stop, and you're out. So all we're looking for is that initial breakout, that initial spike. All right, here's Apple. This is on a 30-minute price chart. Start on the left-hand side of the chart. We have a low down here, and then a high. Then we have a higher low here. And we break to a higher high. So as of that point, as of this point here, we're in an uptrend. This is on a 30-minute price chart. So within the context of this uptrend, we then go low, high, low. So technically, we change to a downtrend. What do? Line in the sand. Break through the line of sand. There's our long. Stop below the low of the previous bar. Accelerate higher. Then we go, okay, let's look for the trend to continue. Higher high, higher low. Higher high, higher low. Lower high again. So what do? Draw that trend line. Break the trend line. Here's our long. Stop below the low. Here's our acceleration higher. Trail stop, and you're out. And again, this is a different trading style than the initial breakout strategy we were using for entries. All right, this is looking for that snap move, that very quick reaction, jumping our direction. All righty. Here's another example. This is the cable, British pound US dollar on daily. Overall, which direction is the trend moving? Should all know it. Overall in a downtrend. Then we put in a higher low here. So we would draw a trend line going up and across this low. Here's our break for the sell. Here's the acceleration. Then we bounce again, another higher low. Draw a trend line. Here's the break, the last kiss, and the acceleration. And then we have this really big trend line. So remember, the more significant the pivots, and this is all stuff, by the way, this is a setup that we talked about in the trading room. The more significant the pivots, the larger the reaction. You guys understand why this is a smaller pivot, this is a smaller pivot, and this whole thing here is a major pivot? You guys see how that works? Significant pivots cause a significant reversal in price action, a big move. Minor pivots are just small reversals in price action. Okay, here's the major trend line. Break it, sell on the break. Stop above previous bar's high. Accelerate lower, trailed stop, and you're exiting over here. Same thing happens yet again. Down, up, higher low. Draw a trend line, break it, sell, rapid acceleration, trailed stop, out. Now, one thing I want you to notice with every single one of these setups, as soon as the market breaks the trend line, you get that snap reaction. It starts to run. One thing I tell people is you've got to learn how to set it, how to have expectations on how a trade should behave. We expect, if we're using this strategy, we have expectation that the market's going to have a very fast reaction and immediately start running our direction. If it does not, if it triggers and then it just kind of hangs out for a couple of price bars, just go ahead and get out of the trade. It's all right to close a trade with a 2 or 3 tick gain or a 2 or 3 tick loss if it's not behaving correctly. And you hear me in the trading room all the time saying, this trade's not moving right, be careful. And that normally means trail your stop right up behind it. It's either going to run or it's going to stop us out. You do the same thing, you apply it to any strategy you're using. Go back and look at historical price patterns, look at how it worked previously, and get an expectation on how the market should move. All right, let's continue on. Here's crude oil. This is why I said we'd revisit this. So remember, our trend shifted to a downtrend right here. And these are all trades that we talked about. This is when crude first broke out of. So if you go back and you look at the major move we had in crude a couple years ago, right? The major move we had, it was all from a consolidation breakout based on what you're learning right now. And I'll show you that. Remind me at the end. I'll pull up the weekly chart and I'll show you what it looked like. And this is what I mean. You can look at any time frame. The larger the time frame you're looking at, the more fiercer, bigger of a reaction we expect. Okay? So remember, as of this point, we're in a downtrend. Then within the context of that downtrend, we go higher, high, higher, low. Draw our trend line. Here's our short. Stop above previous bar's high. Rapid acceleration. First target hit. With that trailing stop. Trailed stop is using like a 2-bar trailing stop. Okay? Actually, 2 bars trailing stop wouldn't have gotten you out until over there, but still, same price. Then again, we have higher low within the context of overall downtrending market. Draw our trend line. Here's a break. Now, what is this right here? Let's see how many of you were paying attention. Lee, Jason, Jamie, Wolfgang, Connie, Michael, David, PQ. You guys got it. It's a last kiss. Remember, once support's broken, it then retests. When do we enter? After it retests and then breaks the previous bar's low. Stop above the high, rapid acceleration. Once again, higher low. Draw a trend line, rapid acceleration. Trailed stop would still have you in it when it was down here. Now, the thing that's important that I want you guys to see about this. So, here's our sell. This is our risk. Our exit, remember, is down here. So if that's our risk, this is our return. In this case, sell, stop. This is our risk. Or if you're entering over here, stop. This is your risk. Exit would have been down here. About a 1-to-1 on the second one. Third one, sell, stop. This is your risk. Your exit is way past down here. It's all about that balance between reward risk and percent win. Okay? The trailing stop rule is just using the breakout logic we talked about earlier. The break above n number of bars high or below n number of bars low. So this is just a 2-bar trailing stop. So you trail it behind 2 bars ago. So it had to break the high of the past 2 price bars to get you out. In this case, it does that over here. In this case, you would have been right back out at even, and then back in again on the bear flag, or on the last kiss, then out again over here. And on this one, you would have still been in it all the way down. All right. So this is what I'm going to show you what some of our members have been saying about their experience with Basecamp trading and with the naked trading. There's no gray area. It's either there's a setup or there is not a setup. Very straightforward approach to trading, and it makes it simple. I've been in a lot of different rooms on a lot of different sites over the last 4 years. This is the first one that I've stayed because of understanding not just what's being done here, but also the way things are presented. Again, like I told you initially, one of the things we try to do that sets us apart is I don't want a bunch of people just blindly following me placing trades. I want you to understand why the trades are happening and be able to place them yourself. So you can say, I know why I took that trade. That was a good setup because of X, Y, and Z. Thomas, information and knowledge you give us in this room is the best in the business, and this is coming from someone who has subscribed and attended to over 100 trading rooms. All right. Now, what I'm going to do for you guys today, I'm going to tell you how you can get into the workshops to learn a whole lot more about price action trading. And this is what's going to be covered in them. All right. In Naked Trading Part 1, you're going to get understanding price action trends, being able to easily identify the underlying trend in any market. You're going to know when a market's in consolidation to avoid the chop. When do most traders get beat up? Remember, what did we talk about first? You want to be trading when it's trending, not when it's consolidating and reversing. So we're going to talk about how to avoid that chop. We're going to talk about timing entries on retracements using candlestick patterns, trading the second break, expectations on breakouts, trading reversal patterns for market tops and bottoms, channel breakouts, will the market break higher or lower, and high-low and low-high reversals, identifying when the market's doing a head fake. Then you're also going to get Naked Trading Part 2. Part 2 is how to move towards being consistently profitable, smoothing out your equity curve. We're going to talk about mastering trading psychology. So there's some head stuff you got to get right before you can really trade. We're going to talk about fundamentals of candlestick trading for timing entries. We're going to talk about what candlestick patterns have the highest probability of success. And then we're also going to start adding filters. I'm not telling you that indicators are bad. I'm telling you having too many indicators is bad. So in Naked Trading Part 2, we talk about what indicators do we want to use, how do we use them, how do we know if we're getting too many, and how do we apply them as filters. We're going to talk about how to use momentum filters to increase probabilities, and we're going to talk about increasing success, but still being able to have actionable signals, because you can overanalyze the market and just not ever place any trades. So you're getting Naked Trading Part 1. You're getting Naked Trading Part 2. But because we don't want to just say, here's a workshop, now good luck. We don't want to just leave you out there and say good luck on your own. We want to help you with that long-term commitment, that long-term guidance. We're also going to give you a month of platinum membership. And then, you know how I said we always try to start people off in acclimation at Basecamp? We're also going to throw in the acclimation workshop. So you can go get those foundation, those fundamental principles of risk management, of trade plan, trade log. Now, normally all this, if you tried to piece it out and buy it, it would be $838. And trust me when I say I had to fight for this number today. We're actually giving it to you today for only $147. Okay? And this is only $147 for all of that. All you have to do is go to bctnow.com/Feb. www.bctnow.com/Feb. And you will get all of the above. Now, if you need help, if you can't get to work with bctnow.com/Feb, send us an email, support@basecamptrading.com, or you can give us a call, 801-889-2699. This price is available for the next 24 hours, okay? Platinum membership is normally $147 a month. This price is available for the next 24 hours, so if you want this bundle deal, you gotta get it in the next 24 hours. Now, remember I told you I'd show you some of those people's equity curves and stuff. This is Dave. Remember I was telling you about Dave? This is his equity curve now. That is beautiful. One of the things he said was, I was losing money. I was subscribed to 50 different quote-unquote gurus, and I was placing 30 to 40 trades a day and consistently going downhill. Well, he went through the Summit framework, and this is what his equity curve looks like now. One of the reasons that he's so successful is because he was able to implement all the knowledge that he learned in the mentorships and in workshops in the trading room, and he was there asking questions. One of the things we do in the trading room is we guide you through this stuff step by step so you can see it. How to use more than one time frame when determining trend. You can look at a longer time frame to get overall directional bias, and then wait for a shorter time frame to match up, and then trade the shorter time frames within the context of the larger time frame. So how many of you feel like you've learned something in today's presentation? How many of you can see how the definition of a trend can absolutely help you? How many of you can see how implementing a proven framework can help you become more consistently profitable? Good deal. This is what people are saying about naked trading. Thanks, Thomas, for the naked trading workshops. Bought part 2 yesterday and used on bonds today. 31 ticks with 2 contracts. Naked Trading Mentorship is the best class I have ever taken in a 2-week period. I would highly recommend it to anyone that is serious about learning how to price action moves, how to enter and exit. Thank you for what you do and all your help. You used to get caught up in all the junk between support and resistance, and I would obviously get chopped up like hamburger. That's what I was talking about. We got to avoid that chop. It wasn't until I found you in your room that I have learned to let the market show me and be ready. Now, remember I told you about Sam's equity curve? Remember he had that one that was blown up? This is his equity curve now. And one of the things that Sam told me when he sent me these equity curves, he said, by understanding how to trade price action without anything, and that was the key to my trading. The results, knock on wood, are almost perfection. I have attached 2 previous blown accounts, equity charts, plus the progress of last week and this week. I'm so happy with what I have accomplished so far, and yet more to come. I'm gaining back my faith and strengthening my confidence towards a brighter future soon. Thank you, Mr. Thomas Wood, for being my path to enlightenment. Yeah, Ram, you can cancel it anytime if you want. And this is futures down here. This is futures, and this is his Forex trading. And he says it's all about the price action from naked trading. But it's not just Sam, and it's not just Dave. This is Lori's equity curve. Lori's equity curve, I'll be honest with you, looks even better than mine. This is incredibly good. And she's gone through the Summit framework. All right. And you can tell that all these traders, they trade differently. Their equity curves show that they trade differently. But they all come back to the fundamentals, those foundational principles I was talking about that all trading needs. There's hundreds of different ways to trade the markets, but there's some fundamental stuff you have to know. All right. So again, you're getting naked trading part 1, which in and of itself we normally sell for $300. You're not only getting that, but you're getting naked trading part 2, which again, another $300 workshop. Plus, we're going to bring you into the membership, and we're going to show you how this stuff works every day in the trading room and in the end of day videos. And you'll get access to the chat room, so you can come talk to the hundreds of other traders that are in the membership that have gone through this stuff going, hey, look, it works. All right. Acclimation. You'll also get the acclimation workshop. Yeah, William, shoot us an email. Because we don't want you to just come in and not understand everything, because you have to, we believe, again, we set it up so you're going through a 3-step process. You start at acclimation, you start with Basecamp. So we want to make sure you're getting access to that. All right. That's going to give you the risk management, psychology, price action. It's going to give you all those foundation that you can then build your trading on. All right. You're getting all of that, not for $850 like it normally would be, but it's for $147. All you got to do is go to bctnow.com/Feb. And again, that's available for the next 24 hours. So what does this look like? Once you go to bctnow.com/Feb, it will bring you to this chart here. All you got to do is fill out your billing information. Now make sure you put in your correct email and your correct phone number. Okay? That's how you're going to get access to everything. Put in your information, complete my purchase, and you are good to go. Alrighty. So let me show you. I told you I'd show you that crude oil chart. Yes, we do. The question is, all those equity curves look like they're intraday trading. Are you issuing recommendations, etc., for day and swing trading? Yes. We do end of day videos. All right. The end of day videos are all about swing trading. They're for overnight setups, trades that'll play out over the next couple of days. So look at this right here. Overall, crude oil in a monthly downtrend. This is where this is what caused crude oil to tank. And we were on top of it 100% in the trading room because of the way that we trade. It's just a textbook setup. Here's our consolidation, narrowing range. We have lower highs plus higher lows, which means compression. When does the big move take place? It takes place when it breaks out and falls to the floor. Feel free to tell the group I'm one of your Friday mentorship students, and I've gained a tremendous amount of knowledge from you, and I've been waiting for a special price on Naked Trading course. I'm all in. Sounds good, Steven. Great webinar, by the way, sir. Thanks, Robert. I'm glad you liked it. I'm in. Sign up for this. Thanks a million. Sounds good, Marcus. Thank you. I'm signed up. Good deal. I'm signed up now. Thanks, Bill. Thanks, Robert. Thanks, Mark. Thanks, Chris. Can we show the S&P in the same context? Sure, let's take a look at we'll take a look at a couple live charts. We have a couple minutes left here. Let me get my screen up. So you want to see the S&P. I'm going to turn this off really quick. Which way is the trend? Excellent. Trend is up. When did the consolidation happen? If you were in the trading room or you watched the end of day videos, it happened right here. When did the breakout occur? Right here. What's this right here? This is the last kiss. When do we enter on the last kiss? Break the previous bar's high after run to the retest. So you're going long right there with your stop below the low, and there's your run. Naked Trading Part 2 starts adding filters to it. And this is, even if you have Naked Trading Part 1 already, this is the cheapest way that you're going to get access to Naked Trading Part 2. This is the lowest price we've ever sold Naked Trading Part 2. Yeah, Wayne, I'm going to be putting it up on YouTube. I took the January trend trading course. Will I learn more with these naked trading courses? Yes, David, you will. We changed it, Connie, from value charts to Basecamp trading because we wanted to realign our outlook with the framework that we're putting together, with the Summit framework. We have, so in the Platinum membership, you're going to get access to the futures trading room, and you'll get access to the options and equities trading rooms. There's 2 different trading rooms. Plus, you're going to get the end of day videos every day where we talk about what's the outlook for tomorrow and what are setups that are happening overnight, what are swing trading setups, and you're going to get access to the weekly outlooks where we talk about what are weekly setups. What's that outlook for the next week? What are swing trading setups on a weekly basis? So you get all of those. No, this is the same as the original Naked Trading. These are all video trading courses. You can watch them this weekend. Each course is about 3 hours long, 3.5. So in total, this is about 9 hours of training. Yeah, Chris, we can try to get the replay out to everybody. Connie, I don't remember the exact number. That was a couple of years ago, to be honest with you. So acclimation. So acclimation is, you know how I told you we have a 3-tiered approach. We start off in Basecamp, and then you move onto the Ascent, and you move on to Everest. Well, Basecamp is acclimation. We're in the acclimation workshop. It's that foundation, all the fundamental things you have to know no matter what type of trading you're doing. So risk management, psychology, trading plan, trade log, how they relate to each other, how you need to fill them out. All that fundamental basic stuff that gets you to profitability. One thing that amazes me is I go and I talk to traders and I ask them if they have a trade log or if they have a trade plan, and they say no. They're just blindly in there shooting from the hip. That's not how you're supposed to trade. You need to have rules you're following. That's how you get consistency. That's how all the traders that we work with, or a lot of the traders that we work with, get those consistent gaining equity curves and are able to come in and say 90% of the days I have consistently profitable. Yep, your membership starts today. It's 1 month. It'll go 1 month from when you sign up. What would be the short trigger? It would be when it broke out of the consolidation. When it breaks through the trend line. There's not a PayPal option. Nope. All right, everybody. That is it for today, though. Again, all you got to do is go to bctnow.com/Feb. bctnow.com/Feb. The price is available for the next 24 hours. Again, this is the best price we have done for these, and I had to fight to get it this low. All right. After 30 days, the membership is $147 a month if you want to stay. Signed up. Thanks, Marcus. Cool workshop. Thanks, Wolfgang. Many thanks. Thanks, Green. Thanks, Mike. You registered. Good deal. Thanks, Bill. Yeah, like I said, I always try to teach you. I always want to make sure you're learning something. So have a great weekend, everybody. The trading room, again, it'll be open on Tuesday. It's open on Tuesday, closed on Monday because markets are closed due to holiday. So have a good weekend. Hope you guys enjoyed it. And until next time, happy trading, everyone.